We got a new episode of Legends and Leaders, and today it's great to have Dan here. Dan, you are behind a company that is changing the way payments are done. Payments is a very fascinating space. There are a lot of companies in this category, and it's broken down to peer to peer, business to business. I mean, there's so many different areas, but you're focused on the way we interact with banks and improving that process. So I'm excited to have you here and to get into your story and what you guys are building.
Thanks so much for having me, Ben. Super excited to be on. Fan of the show, and I think there's a lot of good stuff to talk about, especially now. It's a fast-paced start to the year, and yeah, we're right in the thick of it, so we're super excited.
Awesome. So Dan, first of all, what made you interested in the payment space? I'd love to just start there.
Yeah, I would say in general, I'm a very curious person. And so little story, I'll spare you the full beginnings, but graduated at the height of the financial crisis and recession, kind of fell backwards into technology, and worked for a company that built digital solutions for brands and retailers. And we were one of the leaders in the space and really took advantage of the mobile boom. And one of the things we realized every time we did an implementation was that payments was one of the hardest things to get done in an easy way. Just antiquated, legacy, incumbent solutions that were slow, expensive, a lot of chargebacks, a lot of issues. And I felt as though I had a nice blend of product and business acumen to be able to kind of dig into this problem and really see how it impacts people, firsthand, from merchants paying a lot of fees to consumer pricing going up, affecting the way we shop online. And yeah, with that experience, kind of jumped headfirst into all things payments. I think many people will tell you there's no kind of payments education course. Everybody kind of learns through doing it, school of hard knocks. And I fall into that category 100%. And I learned it, became obsessed with it, um, you know, became an expert in it, and started Aeropay right after that. So that was my entry point into payments. Not super orthodox, but it was fun.
Mhm. So, specifically the company you're at now, Aeropay, um, what made you interested in being part of this, revolution that the company's building, and why do you care so much about bank payments?
So as I was starting the company, I realized one important thing, and also a little about me, is that I'm from South American descent, Argentina and Uruguay. My mom from Argentina, my dad from Uruguay. And when you look at emerging markets in developing countries, money movement, cash payments, payments innovation is so critical to like core development in those economies, and blending kind of what I was seeing firsthand in the US on the issues that we were having with my experience seeing such a cash dominant environment every time I would go visit with my family. I thought, okay, innovation's coming, whether we like it or not. And it's likely developing countries might leapfrog the US in the idea of going from cash to real-time rails. And a lot of those ideas were starting to bubble up, right? The idea of UPI in India or PIX in Brazil, real-time rails in Asia have been growing really quickly. And those were all bank-driven payments rails, like less
Mhm.
card-centric, less credit-centric. And I thought to myself, well, if those efficiencies are going to ring true in those countries and that type of innovation was going to move that quickly there, eventually it would make its way to the US, maybe in a little different way where merchants are driving consumer adoption and consumers are getting more comfortable with the idea of linking their banks for tools or services. So, it's again, entrepreneurship is obviously a lot of hard work, but a lot of timing too. And I felt I was starting to see those signals internationally blending in with people sort of having enough with the way payments were handled in the US, made for a perfect sort of Venn diagram of starting Aeropay in the US. And as you're starting it, you're starting to look for verticals where, hey, payments is a really noisy thing. Can we get an entry point where, cards may not be as dominant, or banking isn't as dominant? And those higher regulated verticals emerged as greenfield opportunities to establish our payment innovation right away. And I'm sure we'll talk about kind of our entry point for in those verticals and how we've solved for them. But that was the genesis of my analysis on why Aeropay, why now, why me, and just the journey that we're on.
Mhm. So getting Aeropay started, like what did it take, Dan? From a resource standpoint, what was product one looking like? How'd you get going?
Yeah, so I said product management by background, so definitely was heavily involved in the technical aspects of it. V1, our alpha product, was actually more retail oriented, less online.
Mm,
It was an application. It had a Bluetooth component. So for the OGs that might be listening at Aeropay, they kind of remember these days. And but it was a pretty unique experience. One of the things I thought about early in the retail environment is, if you're releasing, we were launching at restaurants and retailers, that handing the check off, waiting for it to get back and forth. If we could create sort of this dynamic pay from table experience, again, this is right when I was starting the company, we could bring like value from an experience standpoint, but also from back end, right? The merchant's going to save on fees, and that'll be better for them, and maybe they would create some incentives. So we started by just going door to door in Chicago. We had like over 150 restaurants and retailers of all types accepting Aeropay. And it was an interesting micro test that if a merchant really was feeling the pain on payment processing, could they make that connection to consumers about new payment methods adoption and behavior? Again, you're looking at that as like a very small experiment in what could be a grander exposure to this payment method long term. I think
mm,
we're obviously at a different scale now, but starting it was a lot of trial and error, a lot of pain, a lot of survival, but we learned so much along the way, and I wouldn't trade anything on what we did in the early days.
mhm. What was it like going to some of these banks, Dan, and explaining to them what you're doing? I mean, banks are known for, they're not necessarily known as like, the quickest movers on stuff, all the time, although, they've gotten better. How did you communicate effectively to them and what was the response like?
There are a small crop of very innovative, mid-size
Hmm.
financial institutions, and it's interesting when I talk to fintech founders that perceive the same thing in a different way. They're capitalism is an interesting thing. It forces, intense level of innovation and research and exploration. And I think when we started, we obviously work with some of the larger banks, but we're saying, okay, these higher regulated verticals could lend themselves to for us to prove our model, but we're not going to be able to go to a top five bank and tell them, hey, partner with us in cannabis because there's a good payments innovation opportunity here.
Yeah.
They're like, cannabis, I don't want to touch that. But there are these regional credit unions that are already banking the industry, and the state regulators that are aware of the problems in that industry related to cash burden, right? And the idea of handling that much cash and the risks associated to employees and the wider industry and transportation put an open call out to the private market to say, we need some help. We need digital solutions that are compliant, that work with banks in these industries to provide good services. And so that was actually our entry point in and around 2020, was partnering with regional credit unions that are already working in these industries with pretty strict compliance protocols, but for us to be a technology layer and partner on top of that. So you'd be surprised as we kind of go to our journey in each new vertical we enter, not all of them are high risk or higher regulated, but the specialization of those FIs in certain verticals makes them perfect partners for us. And hopefully the large banks, very large banks, are starting to see that payments innovation is not one size fits all, and you don't have to be scared of, everything in this world. But there is a way to, even if you're a big bank, toe dip, and if you're a small bank, there's a huge competitive advantage for you to establish yourself as a sort of a technology enabler. Again, in a very compliant way, but we started to see those small banks are taking advantage of that.
Mm. And what does integration look like from like a technology standpoint on your end? I mean, I know a lot of different fintech companies, they try to make it as seamless as possible, but there's still things that have to happen. How did you think about that process and how complicated is it?
I think it's a push-pull dynamic in your early days, right? Do I use a third-party service where it's it's easy to integrate to one API, and that one API, right, the typical BaaS model gives me my real bank relationships, and potentially if you're a fintech in kind of the neobanks, we have depository integrations and ACH and cards and all these other things. Or do you go closer to the metal, harder effort, but better unit economics? And I think we took a very kind of typical early journey where we integrated to some third parties to just get it up and running. And then we start realizing, okay, well, we really have to have our own bank relationships if we want to enter these verticals in a way that, is compliant, but opens the lane for us. Or we really have to build our own bank aggregation tool because we can't rely on a third party to tell us yes, no, or charge us an exorbitant amount. And so we have to build into the infrastructure, and that takes time and proper product decisions and when you make those decisions. But again, I would not discourage an early entrepreneur to get up and running with third parties. But then you do have to start to think about, okay, like, should I be building another kind of area where I do a lot of my own infrastructure, and can you take a small bite into that infrastructure and coordinate with investors on the right investment timing to do your own infrastructure? Because long term, and we're feeling this now, is as you grow, people are going to look at transaction margin and your unit economics really closely. And to raise A, B, C, those are going to become like core questions. And it's not just going to be about how many users and how fast you're growing, but it's going to be about like long sustainable metrics and dynamics. But again, you're sitting in a position now where we're doing a lot ourselves. But again, that's unrealistic when you're on a very lean budget and you're just getting started. So again, that was our journey, and I think it's a pretty typical one.
Mhm. I mean, with the financial space, you've got, I mean, some of the toughest regulations you have to go through when you want to enter new
For
markets.
sure.
It's not just like, I mean, I'm in the shoe business. If I want to sell a shoe in another country, it's just, D2C online, they buy it, we ship it to them. And if there's a tariff, there's a tariff. For you, it's very different. How do you figure, how do you look at like which markets are worthwhile based on the size of the company? And how did you kind of figure out your expansion plans?
Yeah, by the way, I gotta say, my dad was in the shoe business for a long time. He was the founder of Pony Sports Apparel in the 70s
Amazing.
and 80s. So we definitely have a line of entrepreneurship in the family, which, I was always around the table, and that's kind of a big reason why I took the big shot to create value.
It's a great brand.
Um, yeah, yeah, and even now it's still around, so it's kind of nice to see that. Which is, to your question, I think one of the things I'm trying to do when I create Aeropay is look at a very long time horizon, which is a little different than maybe some high growth companies, which you know might look for a kind of a financially oriented outcome, whether it's an acquisition or IPO. I think that's all well and good, and you know no knock on those goals, but how cool would it be to create like a generational company that's dramatically changing the way we look at money movement, risk, compliance, consumer financial literacy, consumer pricing. And I think payments at its core really does a lot of those things. So early days, what we did was, okay, well, yeah, we're entering an industry like cannabis or gaming or, predictions. Compliance at its core needs to be tagged to that. And we actually started that way. So in many cases, it's inverse. Build a lot of technology. Oh, shoot, we're entering this industry. We need some compliance. Um, for us, it was risk and compliance first, and then we establish ourselves as experts from a risk and compliance standpoint, and then we enter those industries, which has been a huge differentiator for us, because as you're going to operators or banks or technology partners in those industries, we're coming in as actually subject matter compliance domain experts and saying like, hey, you guys should watch out for this, or this is what we're reading, and here's this memo that came out, in our opinion on it. And it really helps things like, I'll give you a very practical example. Underwriting in highly regulated industries, one of the main kind of known issues is that it takes forever, right? You underwrite for payment processing, and it's going to take months. but we're coming in with really good chops on the compliance side, and underwriting becomes a major advantage in the speed to get approved with our FI partners. So now you're seeing, okay, well, core kind of lens on compliance sets ourselves up for foundational, like long-term generational growth, but along the way has like very immediate benefits and tactical benefits to, winning business, commercial, go-to-market strategies, and things like that. And that's something I'm really proud of.
Yeah, it's a fascinating space. There's a lot of upside, especially because like the fintech consumer is there's a lot of usually a lot more money there than other areas, but the complexities are difficult, definitely difficult.
Absolutely. And it's going to get harder, especially with anything that grows. There's just more eyes and scrutiny, and I think it just makes it all the more important to do it the right way. Again, I've been talking about risk and compliance, but technology and scale,
Mhm.
we just had the Super Bowl. It's a very big day for the gaming industry, and the amount of stress that puts on, I would say, the entire collective load of these platforms. People, you got to get ready for it, and it
Mhm.
and it requires a ton of load testing up until the day, and we have special on-site and like mission control rooms going, and I think that just shows that you got to get ready for that level of scale. And I'm sure we'll have other days like Black Friday for retail shopping, and as pay by bank grows into that ecosystem, and I'm confident it will. Those will be special days for us as well,
Mhm. So just like a higher level question, why do you believe in pay by bank so much?
because it's desperately needed. That's why. And I think when things are needed, you have to have people providing the service. And I think, we always talk about why Chicago, why us. We're not in New York, the Bay Area. We haven't been funded to the tunes of hundreds of millions of dollars, potentially even billions. We don't burn through capital. We're very pragmatic in our growth and the way we raise capital and the way we hire and the way we distribute. And I think it's a company with that sort of DNA that establishes the right roots for true pay by bank, open banking payments in the US. Because large operators, merchants, retailers, utility platforms want to work with partners that have a long view on payment methods, right? And the very macro vision is we want to be the fifth great payment network, right? We talk about the idea of a network all the time, right? You have merchants and you have consumers, and you really want to create this, emotional connection between the two. I think we've been sort of pulled apart, and many interested parties have inserted themselves in the middle. And from swipe to settlement, you have over 20 steps and a lot of toll takers in the middle, and it drives up the cost for everybody involved, merchants and consumers. And I think the US is a very practical place when it comes to innovation, right? It might be like we have to break away some old habits and a lot of marketing spend to convince us that we need cards, and those cards drive a rewards program, and we're addicted to those rewards, but merchants pay for those rewards. And now the dynamic that I'm sure you've seen, Ben, is surcharging on those cards, right? And you see it on your bill and you're like, why am I paying for that? I'm paying 3%, but I earn 2% on this card. And that whole dynamic feels broken to me. And I think, what if you paid with a cheaper payment method, and the merchant could say, okay, well, now I could save you that 3%, not have the 3%, or save you 3% on your bill. And we're also thinking about innovative ways that actually create our own incentive structure that doesn't pull from merchant rewards. So look out for that later this year from us. But our big focus is to make this a sustainable, long, consumer-driven payment brand, that doesn't hurt merchants in the long run, and really kind of helps the entire financial ecosystem.
It's a great goal. Pay by bank, yeah. But I wonder why it just hasn't got as much adoption yet. Like you guys are really, it's almost like pioneering it. I mean, you would think it's just very convenient to pay by bank, but I guess the technology hasn't been built.
I would say a few reasons. It's been tried in the past. Open banking as a concept in the US is not driven by a central government-oriented entity. That's
Mhm.
one big difference from international adoption. Like again, I mentioned UPI in India and Pix in Brazil. These are central bank-driven initiatives where corresponding banks have to be able to provide this service and legally have to provide and abide by the service. Here, I think we're a lot more flexible due to obviously interested parties that don't want to rock the boat too much. But we're not avoiding it entirely, right? We had 1033 with CFPB, and obviously there's a push-pull there, but overall, you still feel an intent to say open banking is okay, and it's actually good for consumers to link their bank accounts to, fintech or payment services that they want. And that's a relatively new concept still. And then as that's kind of set a foundation, the next is, okay, well, if I can connect my bank easily, how do I move the money from point A to point B? And we've really revolved around ACH for a long time, but now there's RTP and FedNow, and there's a new service called RFP, Request for Payment, which is a real-time push payment that more banks are adopting. It's okay, now the rails are there. How do you handle the risk? And so that is really one of our main differentiators and specialty is that we actually manage the entire risk of the money movement. And historically with cards, like if a chargeback happens, it's really on the merchant to deal with it. And we're saying merchant doesn't worry about it, consumer doesn't worry about it, we worry about it. And a lot of our technology helps mitigate the risk associated to fraud or, NSFs or disputes or things like that. So you need all of these pieces to create the foundation of what like modern day pay by bank really can be. And historically, you never really had solid foundations, right? I'll just say the inverse of what it used to look like. Manual routing and account input. You remember the micro deposits after 2, 3 days, then a blind send of the transaction. You hope and pray it gets where it's going. And if it doesn't, because there's no balance there, right? Because, let's say there's no balance check, there's a return and you're like a typical check bounce. So it took a lot to get to where we are. I think we're at an inflection point and now it's all about distribution and consumer adoption and incentives.
So just the last question I have, like, what are the steps you think you're going to take now to get this to the next phase? Is it just an awareness issue?
I think a lot of belief has to start happening, awareness and belief. We are still at a point where we evangelize a lot, concepts, doing talks like this one, saying, it is real. We take on a lot of the risk. It's a lot cheaper. It's fast. We can really help your business grow. Payment process, I recently wrote a piece on payment processing during volatile markets, both high growth and corrections. It's as applicable in both. And you really, the other thing too, I would say domain expertise at these organizations saying, yes, payments is an area we need to invest expertise in, bring folks that have sort of learned, as I said at the beginning, call along the way, so they can specialize in optimizing the payments area. Because if you do it right, it could make or save a ton of money for the business. And so I think we have to continue to work with our counterparts at those clients to say, like, Pay by Bank is here. It's real. You want to accept it. It could save a lot of money. And if we work together on adoption, it could actually start to create, revenue, just given higher basket sizes and the speed of money movement and the lower risk, beyond just being a savings from other payment methods. And then we're going to release our own consumer incentive programs that we're going to bring to really drive adoption. And I think that's when this thing flips and the flywheel starts going. And then we realize our dreams of becoming the next great payment network. Now that could be years time, but we're starting to plant the seed, and right now we're like in the middle of that inflection point.
Mhm. Well, Dan, I appreciate you taking the time and sharing what you're building. I think it's a really good idea and definitely makes a lot of sense. It's kind of wild that it hasn't become something that's already, out there in mass market. And
Yep.
I think you're going to have a lot of success with this. And I'm just excited to see where it's all going to go. Thanks for coming on.
Yeah, thanks, Ben. Great chat. Thank you for having me. I love talking about this. So anytime, I'm around.